But I do think this portfolio point of view, in the book, you actually talk about having 10 to 15 uncorrelated bets at any given time. And I would imagine in your context, truly uncorrelated, whereas most folks buy US equities and think that they're in different sectors. But obviously, there's a great degree of correlation when you're buying a bunch of US equities.
Equity prices, just to keep in mind this, many times equity prices in inflation adjusted, therefore purchasing power terms, have declined 60 or 70%.
Yeah, that's incredible. That's an incredible fact for folks to take in. So when you adjust for the value of your dollar, equity prices have really taken a hit, even though the market's gone up. And I hear this a lot.
And from 1966 until 1984, you had a negative real return.
I think this is super important, Ray. I just want to double click on this and then we'll talk about the US. But a lot of folks talk about markets going up without taking into account what is the denomination that those markets are measured in this case, US dollars. And when you look at the value of your US dollar and you look at the market going up, even if you bought equities, what you can now turn that dollar into has actually not gotten much stronger. Folks have really taken a hit. And I think this is super important.
Yeah, so I'm glad you're bringing it up. I think it's super important too. And I just want to emphasize, you have to look at your returns in real dollars.
What can you buy?
Okay.